Fast casual Mediterranean restaurant chain Cava has filed to raise $100 million in an IPO. Cava's S1 registration statement shows strong growth. Revenue is up 28% year over year, and there are now 263 restaurant locations across 22 states. That's up from 164 in 2021. However, the company is not yet profitable and lost $60 million last year. Other publicly listed fast casual chains include Sweetgreen and Chipotle. Sweetgreen had an initially successful IPO in 2021, but it got hammered in the downturn. The stock's fallen 80% since it went public. Meanwhile, Chipotle has been one of the best performing stocks this year, up 48%. So, Scott, you were on the board of Panera Bread, which is sort of a pioneer of the fast casual category. What do you make of Cava's IPO?
Well, I'm pulling for it because I know the people at Panera, and they're super smart and super hardworking. And if this goes well, it probably sets up for a warm reception in the public markets for Panera. So I'm pulling for it.
This was referring to the Cava IPO.
Yeah, I know.
Okay.
And I'm making, doing a metaphor. You graduate of Prince. Let me walk you through this. Essentially, I'm saying that if the Cava IPO goes well, it'll connote good things for other fast casual trying to 24-month reunion. How fucking ridiculous is that? Seriously, how ridiculous is that?
I should have never said it.
Oh my God. Anyways, look, the revenue grew 13% in 2022, and they're up 28% year on year so far this year. They want to open about 40 new restaurants. That will be, I think, about a 15% growth. And loss will increase as the company opens. It's probably a really good time to open restaurants right now because typically opening restaurants, the key cost driver or the risk is the cost you get the real estate for. And I can't imagine, for the first time in probably 30 years, or in a while, I shouldn't say 30 years, maybe since 2009, the tenant has leverage over the landlord. The best real estate in America was kind of owned by 2 or 3 big operators. They'd kind of developed an oligopoly pricing power, and it was just very expensive to go into, your kind of tier A malls. And now I would bet that there's a lot of mall operators or real estate owners who are being very creative and flexible around terms. So that's good for Cava. I know that commodity prices are up, which has hurt margins. We were feeling that at Panera, but I imagine they're starting to come down. So we'll see. I wonder if Sweetgreen's problem, unless it's Chipotle, I kind of don't care as a consumer. And I'm pretty sure I'm about 10% of that, I don't know, whatever it was, 40% or 28% increase in the stock price. Actually, Chipotle's up 48% this year. Oh my God. Now, if you could have a NVIDIA burrito bowl, that would be genius. Anyways, but I think Sweetgreen's been hammered by people not returning to the office. I bet that's a big kind of lunchtime thing in urban centers where there's big offices. And I think you're going to, I don't know. The honest answer is I'm blathering on here because I don't know. You're young and eat at shitty places. What is Cava?
Well, Cava is just fast casual, i.e. healthy, slightly more high quality, slightly higher quality, slightly more expensive fast food restaurant. And the style is Mediterranean. And I guess the main insight here is that we've seen this massive explosion in this category in the last few decades. So in 2009, there were 17,000 fast casual restaurants in the US. It was a $19 billion market. By 2018, that number had doubled to 35,000 restaurants. It had grown into a $48 billion market. The global market is expected to reach $209 billion in annual sales by 2027. So it definitely feels like this is a big global consumer shift from traditional fast food to fast casual. So I guess my question to you, especially given your experience at Panera Bread, would be, what is changing about consumer preferences in the food industry? And do you think that we're going to see a decline in the staple fast food brands?
The only insight I would have is that think of them not as much as restaurants, but as distribution centers. And that is now over 50%, I believe, of purchases at Panera originate digitally. People, buy online, pick up in store, drive through, bomb in, bomb out, delivery. COVID sort of accelerated that trend, and they had to build in new capabilities. And COVID, to a certain extent, gave them cloud cover to make these types of investments.
Yep.
So, I mean, the innovation is pretty striking. I still think. I mean, the other thing that just always amazed everybody was Chipotle, Panera, and Starbucks had similar NPS scores, somewhere I think in the low 60s. People love those brands.
Could you explain what NPS means?
Net Promoter Score is basically your likelihood to tell someone else. Would you recommend this to a friend? Would you not? And then it's a ratio of those that creates an NPS. And that number, or that is seen as a very simple metric that kind of connotes the value of the product. Would you recommend it to a friend at the end of the day? And, we all studied at the test around NPS, and anyways, a whole different talk show there. But the NPS for Chick-fil-A is like low 80s. I mean, Chick-fil-A is a phenomena. And I would argue the reason they've done that is because of their compensation strategy. They lend money to people who want to be store managers, so there's an owner there at all times. And if you really think about great restaurants and great retail, it's kind of a function of the level of vested interest or ownership that someone has running the store, because you can just feel it. When you're in a restaurant where the owner's there, just everything works better.
Yep.
But the sort of thinking of them as distribution centers as opposed to restaurants, figuring out a way. I'm calling on my best examples. In-N-Out Burger, it strikes me that the employees are happier, and you can sort of feel the vibe. But sometimes when I go into kind of a fast food restaurant or retail in general, you get the sense you're talking to someone who's thinking about the most recent casting they didn't get, and they hate their life. They hate being there. And they're there not out of choice. They're there because they have to be. And I guess that's sort of a decent definition of work, unfortunately. But I feel differently. When you go into an In-N-Out Burger, they seem to be, kind of like there seems to be a spirit of camaraderie. Their uniforms are clean. They seem just generally, I don't know, not hating their day as much as other fast food places. I always feel like the food is, I don't want to say last, but the culture, the cost of the real estate, and then figuring out a way to create more dollars per square foot through digital technology. And then the one thing I don't think they've done that Panera's actually been able to do is these loyalty programs. And at one point, Starbucks with their points program was like the 8th largest bank in America because it had something like $30 billion in Starbucks point or preloaded Starbucks cards. But retail has traditionally been a great way to scale a business. I think it's overinvested. I think it's a very difficult business. But fast casual, I hope that this goes well. And it's also, well, just talking about Chipotle, 7,000 restaurants is what they envision for North America. It currently has 3,000, so there's going to be a lot more Chipotle, which is just going to be wonderful for the world. And we talked about it, up 48%. It's valued at an enterprise value to EBITDA of 36 times. That's greater than Apple, Amazon, or Alphabet. So if you want a tech stock, invest in Chipotle, or at least a company that's got big tech-like valuations. That probably means you should avoid it, quite frankly. And then Sweet Green has got a little bit more hair on it. The profit margins at Sweet Green are kind of half of what Chipotle is. And at Cava, they're somewhere in between. So it's going to be really, really interesting. The thing that makes me want to try Cava is that the research that Mia pulled together, Cava spends 32% of their costs on food, whereas Sweet Green spends 28% and 30%. And how much does lettuce cost? Anyways. And then labor, it's interesting, Sweet Green, 31%. And then occupancy. What's interesting is Chipotle only spends 5% of their total revenue on occupancy. And we used to, in specialty retail, have this basic metric. And that was if you could get below 12% of your revenue going to the occupancy costs, you had a model that worked.
What actually are the occupancy costs? What is
rent,
that?
Rent and utilities, four-wall unit economics. Cost me $50,000. I have to send the landlord $50,000, and then another $10,000 in insurance and lights and utilities, and at $60,000, and then I do I don't know, $720,000 in revenue, that means
Yeah.
I have, what is that, 8% overhead costs. Anyways,
Yeah.
or 8.5%. I did that in my head. That's because I did a lot of drugs as I did not go to Prince. We're just going to keep coming back to that, Ed.
Keep doing it.
But that
Love it.
5%, that 5% number, occupancy as a percentage of total revenue, isn't because they have better deals. It's because they run so much revenue through those stores. I mean, Chipotle, it's a phenomenon. I used to go down to CNBC on Wall Street every Wednesday before they unceremoniously canceled me, which I never bring up. And I used to go to Chipotle, and there was always a line. But the thing about the line is it moves really fast.
Mm-hmm.
And the queuing, I mean, they just, I used to go to a Southern Mexican place called Dos Toros, started by two Cal guys. It was just this fantastic Mexican place. But they didn't have the capital to make kind of big places where the flow could go faster. So I imagine that they don't do a fraction of the volume. But Chipotle is just a business juggernaut. They just do they do a fantastic job. And Cava, my guess is they won't get the same multiple. But both Cava and I forget the other one that are filed. The most important thing about them is not what they say about Cava, not what they says about fast casual, but what it'll say about the state of the IPO market. That's what everyone will take from this.